Welcome back. Let's get you all the business news now. And market snapped a three-day losing streak, closed higher, led by HDFC Bank, Reliance Industries and Infosys. IT and telecom sectors advanced, while utilities and auto were under pressure. Hiral Dadia with a wrap of all the market action.
Markets actually staged a smart recovery in trade after the recent slide that we had seen. In fact, a three-day losing streak is what the markets have been able to snap as well. Nifty ended above the 19,500 levels, whereas the Sensex gained almost 480 points in trade today. If you see in terms of Bank Nifty as well, that clearly outperformed benchmark indices in trade today, and this was in spite SBI being one of the heavyweights, which was one of the top losers on Nifty 50. Clearly, you had IT Pharma that gained in trade. Autos were the ones which slipped in today's session. The breadth was pretty much in favor of the bulls. If you talk about the gainers, Cipla was one of the top gainers today, and this was on the back of the stake sale by promoters that has been doing the rounds. IndusInd Bank, Tech Mahindra, Wipro, as well as Bharti Airtel, which reacted on the back of numbers. On the losing end, SBI on the back of the slippage number was one of the top losers. Bajaj Auto, BPCL, NTPC, as well as Maruti were the other losers. Let's quickly look at a few of the earnings reactions today. So M&M reacted in trade today on the back of earnings. Aditya Birla Fashion reacted on earnings. So Zomato saw a stellar move in today's session on the back of the operational performance improving, on a year-on-year basis as well. JM Financial was under pressure as well in terms of where earnings go. Apart from that, if you see in terms of stocks which reacted on the back of earnings were JK Tyre, Devyani Industries, Axo Nobel, as well as you talk about Vardhman Textiles, Alembic Pharma. These were a few of the names. In terms of newsmakers, another one that was in focus was a Dixon Technologies in trade, and this was mainly on the back of the benefit that they will see from the laptop as well as PC import restrictions, and you saw a good jump coming in there. So yes, we did see a good stock-specific action in today's session, but the markets were also pretty much supportive after the bounce back that we saw. But whether this will sustain next week or not is going to be crucial to wait and watch. And you have the RBI policy that is slated next week. Back to you.
The recent Nifty run-ups of pharmaceutical surge, talking about the pockets of growth in the pharma industry. Amit Verma of Quadria Capital shares the strategy of growth in foreign markets. Listen in.
Specialization in any form or shape of healthcare is going to be rewarded. So just being in generics and turning around and selling paracetamol or any kind of antibiotic is not going to work. You need to be in the subspecialties the way Concord is when you look at transplant medication and immunosuppressants. So I do believe the US will continue to be the largest market and the most profitable for us sitting here in India, but we will have to go deeper into subsectors for it to work for us.
The world of private credit is seeing an influx as investors look for alternatives to invest in. What are the returns and risks involved? Listen in to Neo Asset Management's Hemant Daga as he speaks about the returns private credit has to offer.
In the US markets, Neeraj, in the last 10 years, the top 25th percentile funds, have delivered 13% compounded dollar returns.
Wow.
13%. The US equity markets have delivered 8% compounded in this period. Right? Now, typically in US, if something delivers 13% and you assume a dollar rupee depreciation of 4% every year, that should very, very intuitively translate to 17 to 18% rupee returns, right? So we are not talking anything out of the whack in that sense. If in the US there is 13% dollar, just apple to apple, that should be 17 to 18% rupee in India. And the very fact that India is a market which is nascent, growing phenomenally, I think returns obviously will be slightly better than 17 to 18 because US is a far developed market, which is why in India, most of the asset managers and even Puneet and me in our previous avatars, we've delivered slightly northwards of 20% gross IRRs. And that's true for many asset managers in the country, large asset managers who have raised more than $1.5 billion from sovereign wealth funds.
Compounded over how many years?
Compounded typically over 3 to 4 years. These are relatively shorter durations in that sense.
Lupin reported a good set of numbers in the first quarter. Profit and revenue surged, margins expanded and were above street estimates. Moreover, India's sales rose 10%, contributing 35% to the total revenue. BQ Prime spoke to Ramesh Swaminathan of Lupin about the sales numbers.
There has been secular growth across all our markets. So if you look at, for example, America, we recorded the same, in fact, slightly higher than, in fact, Q4 of the previous year. This, despite the fact that there's actually a drop in seasonal products. We are, of course, aided by the fact that we were able to launch Darunavir in the US. Apart from that, if you look at India, it's recorded a very good performance. It's double digit. If you were to, take away and this despite the impact of a negative impact of NLEM, so to speak, which actually happened, last year, in the beginning of this year. So essentially, apart from that, the most important reason is the fact that we were able to record a milestone payment from AbbVie for one of our molecules that we kind of out-licensed to them. All of this actually helped in growing the top line and, of course, the gross margins and, of course, the bottom line also.
Blue Star reported a healthy set of numbers in the June quarter. Revenue and net profit surged 12%. Margins also expanded considerably. BQ Prime spoke to Blue Star's chairman and managing director Veer Advani, who expects a double-digit growth for the industry over the next few years. What will aid this growth? Will Blue Star be able to maintain their steady quarterly earnings? Listen in.
We are less worried about a loss of a summer. We're more interested in the trend and in the direction that the industry is taking. You know that just like Blue Star, there are other manufacturers that are making significant investments. We're all looking to grow the market. The consumer is very keen to buy air conditioners. So we're fairly confident that the long-term view of this industry remains intact. One lost summer does not mean that the outlook changes for us. So as far as Blue Star is concerned, we're continuing with all our investments, both in CapEx as well as in operating expenses. And we're looking forward to a strong H2. I don't think July, August are going to make much of a difference. I think it'll be the festival season onward. And of course, looking forward to a strong Q4. I think directionally, we're looking at double-digit growth for the industry over the next several years.
India's largest lender, State Bank of India's first quarter profit more than doubled on higher interest income and lower provisions. Asset quality for the quarter improved. The bank's fresh slippages more than doubled sequentially. Listen in to what Dinesh Khara has to say about the slippages.
When you look at slippages, in our case, the slippages are not as much coming from the running accounts. And even for that matter, even stock of our stress portfolio has also come down significantly. Corporate does not have anything, SME does not have anything, retail does not have anything. Only slippage has come from SME and agri, and there also we could pull back a significant portion. So I think it is it's a function of the economy on ground, and I would say that the cash flow disruptions lead to some kind of a disruption in the repayment timing. But more or less, I would say that there is, in terms of quality, it's a much better quality, and in terms of the portfolio.
Mahindra and Mahindra's recent acquisition of a 3.53% stake in RBL Bank raised questions about the group's objective. Why did the auto manufacturer acquire a stake in RBL Bank? Anish Shah of Mahindra and Mahindra explained the rationale.
We saw an opportunity with a bank that was very well run, a very strong management team, a very good foundation, at a price to book that was lower than 1. It was a great investment opportunity from that standpoint that came together with our desire to understand this sector in banking a lot more. And that is the reason we've gone ahead and taken a 3.53% stake in this bank. At this stage, we do not expect to go higher. At some point in future, if there's a very compelling strategic reason, which we will have to understand in detail, evaluate in detail, in line with our capital allocation guidelines, we will look at it at that point in time. But today, that is where we are.
Akash Educational Services, owned by Byju's, is reconstituting its board under an agreement with accreditor Davidson Kempner Capital Management. This after certain loan covenants were breached. Rishabh Bhatnagar with more details.
Well, yes, Akash Educational Services, the coaching giant owned by Byju's, has seen its board being reworked today. The board will now have 3 Byju's nominees and 2 independent directors as of now. Now, while Byju's has denied to us that this is related to the pending debt funding by Davidson Kempner, Bloomberg has reported that the Akash board reconstitution is being done under an agreement with Davidson Kempner after certain loan covenants were breached. Davidson Kempner is a US-based hedge fund that was in talks with Byju's to loan it about $250 million. Since then, the funding hasn't entirely been closed, and the creditor is now reviewing its terms. Akash was acquired by Byju's in a cash and stock deal worth about $1 billion in 2021. The full payouts of that deal are also not completed yet, with the stock part of it hanging in limbo because of an equity swap deal that Akash shareholders are not willing to go through with now because of Byju's dwindling valuation.
And that's a wrap of all the business news.